Welcome back to Investing Talk Podcast.
Great to be back.
Today we're looking at NioCorp developments. The ticker's been, well, pretty active lately. Lots of buzz.
Definitely a lot of buzz.
So the big question we're trying to tackle for you, the investor, is this. Is NioCorp a good buy right now?
Yeah, and it's a really important question because, look, NioCorp isn't your average stock. We've seen some significant momentum recently.
Fueled by capital raises, project expectations.
Exactly. Expectations around the Elk Creek project are huge. It's all about critical minerals, U.S. supply chains, a lot going on.
So our mission today is to cut through that noise. We'll dig into the financials, the technicals, and crucially, what catalysts are coming up.
Right. What the next few months might actually hold.
Absolutely. We've done the groundwork, gathered the info, and we're ready to walk you through it. But before we dive in, just a quick reminder.
Yes.
Please subscribe, like, and comment. And hey, if there's a company you want us to analyze in the future, just drop the name or ticker in the comments below. We really do look at those.
We do. Your input helps shape the show.
Okay, let's get into it. NioCorp's recent ride. It's been pretty wild, especially the last 3 months, say August to October 2025. What really kicked off that initial surge? What was the spark plug?
Well, the main driver, the real spark, was a pretty significant strategic move. Back in August, NioCorp announced and closed a $50 million registered direct offering.
Okay, $50 million, that's substantial.
It is, and it wasn't just, general corporate purposes. They issued 10 million shares at $5 each, and the funds were very specifically earmarked.
For Elk Creek.
Primarily, yes. Accelerating development at Elk Creek and for working capital. It was a big vote of confidence, essentially funding the next steps.
So the market saw that as like de-risking the immediate future for the project.
Right.
How did the price react?
Oh, it reacted big time. Almost immediately after that funding news, the stock just took off. It jumped almost 30%, 28.71% to be exact, in just 2 weeks. Yeah, and that momentum kept building. It pushed the stock up to a new 52-week high, $8.10 around September, early October. It was a very clear signal the market liked that funding certainty.
Right. And when a stock makes a move like that, you often see the bigger players, the institutions, start paying attention. Do we see that happening in October? Any sign of the whales coming in?
We did see some movement, yeah. Institutional activity definitely picked up in October. We saw funds like ProShare Advisors and Wealth Enhancement Advisory Services taking new, decent-sized positions.
So not just retail excitement then?
No. This indicates some sophisticated money is placing bets on NioCorp's path towards production.
Okay, and what about the analysts? You mentioned H.C. Wainwright raised their price target. Does that mean everyone's bullish now?
Well, the overall consensus definitely tilted bullish. It shifted towards a buy rating, partly helped by Wainwright bumping their target to $8.25. But it's really important for listeners to understand this isn't universal agreement. Yeah, the market's still a bit divided. You have to contrast that bullishness with, say, Weiss ratings. They stuck with a more conservative sell rating, a D-, actually.
D-, okay, so a real split.
Exactly. It highlights the fact that, yeah, the potential opportunity is massive, but it's still a development stage company, and that risk profile keeps some conservative investors on the sidelines.
That makes sense. I mean, let's be real. It's a pre-revenue company right now. The stock chart might be exciting, but they aren't actually making money yet. So what's the underlying financial picture? What do the numbers look like?
Right. Let's look under the hood. As of October 2025, the market cap is around $708 million. Now, you're right, pre-revenue currently, but the forecast for the full fiscal year 2025 is about $71.92 million in revenue.
Okay.
Though the first meaningful revenue, the stuff that really counts, isn't expected until next year when Elk Creek actually starts commissioning and ramping up.
And earnings per share, EPS, I'm guessing that's still in the red, given they're building the mine.
Yeah. Exactly. Negative EPS is just part of the deal at this stage. FY 2024 was negative $0.31, and the projection for FY 2025 is around negative $0.35.
So still burning cash.
Still burning cash, yes. But here's the key thing. The market seems willing to tolerate that negative EPS right now. Why? Because they see it as the cost of securing future access to what could be a near monopoly on U.S. supply for these critical minerals, niobium, scandium, titanium.
So it's a strategic investment in future supply.
Precisely. Investors are making that trade-off. Liquidity seems adequate for now, thanks to that recent financing. But yes, free cash flow is negative until they flip the switch on production.
Okay, so the whole investment story really hangs on the asset itself, on that competitive moat. What makes this Elk Creek project in Nebraska so special, so valuable?
This is where NioCorp kind of transcends being just a mining company and becomes more like a strategic asset, potentially a national one. Elk Creek is known to be one of the largest undeveloped sources in North America for three really critical elements: niobium, scandium, and titanium.
All right, these aren't just everyday metals. What's the significance for U.S. industry?
Well, it could be a game changer for supply chain security. Niobium is crucial for high-strength steel in aerospace, defense, pipelines. Scandium lightens aluminum alloys, think fighter jets, high-performance bikes, even some electronics. And titanium, well, everyone knows its uses in aerospace, medical implants, chemical processing.
So built-in demand from really critical sectors.
A huge demand tailwind, yeah. Directly tied to aerospace, defense, electronics, even green energy applications.
So NioCorp is basically positioned to sell into future scarcity, especially domestic scarcity. Is that the moat?
That's a great way to put it. They control a very large resource, over 1,300 acres. And here's the kicker. There's really no clear direct competitor with a similar scale U.S. asset focusing on this specific mix of critical minerals.
Unique positioning.
Very unique. Think about potential U.S. supply chain bottlenecks for these materials. NioCorp is building the domestic asset designed to address that. That strategic scarcity is their edge.
That definitely sets them apart from, say, a typical gold miner. Okay, let's switch gears to the technicals. Look at the chart. Does this upward move look like it has legs, or is it maybe running out of steam?
Technically speaking, the chart looks pretty healthy right now. It suggests the momentum is sustained. The stock's trading well above its key moving averages.
The 50-day and 200-day.
Exactly. The 50-day simple moving average, the SMA, is around $4.70, and the 200-day SMA is way down at $2.87. Being above both is a strong bullish signal, confirming the uptrend.
Okay, that's the trend. What about nearer-term levels? Where's the support if it pulls back, and where might it hit resistance?
Good question. Support looks pretty solid around that 50-day SMA level, the $4.70 mark. That should act as a floor. On the upside, potential resistance seems to be forming near $8.80.
And momentum. Is it overbought yet?
That's the interesting part. The RSI, the Relative Strength Index, is sitting around 43.41. That's actually quite constructive.
How so?
Well, it's not up near 70, which would signal it's overbought and maybe due for a pullback. But it's also comfortably above 30, the oversold level. So 43 suggests there's still room for more buying, more upside, without being immediately overheated. It's kind of in a sweet spot.
Now, you mentioned this is a unique stock. Its beta is really low, right? Around negative 0.06. That means it doesn't really move with the overall market. How does that fit into the technical picture?
Yeah, that negative beta is fascinating. It basically means NioCorp is acting like an anti-market asset right now. Its fate seems tied more to company-specific news project milestones, funding, policy support for critical minerals, rather than the day-to-day swings of the S&P 500.
So it offers diversification.
Exactly. It potentially insulates investors from broader market sell-offs in a way that, a traditional highly correlated mining stock wouldn't. It adds a defensive quality, even with the recent momentum.
That's a really interesting angle. Okay, looking ahead then, what are the specific events, the catalysts that investors should be watching over the next, say, 3 months? What's on the calendar?
The calendar is pretty packed, actually, which is probably why we'll continue to see volatility. We already had some CEO presentations in early October, but the key stuff is coming up soon.
Like the Q3 results?
Yes. First up is the Q3 2025 financial results that's scheduled for November 12th. Investors are going to be laser focused on that one.
What will they be looking for?
Proof of progress. They'll want to see how that $50 million raised in August is being deployed. Are they hitting milestones at Elk Creek? Is the money turning into tangible progress on the ground? That's key.
Okay, November 12th. What else? You mentioned institutional interest earlier. How do we track that?
Mid-November is when we get the institutional 13F filings. For listeners, these filings show who owns what. They'll reveal which big funds, which whales bought in during Q3, how much they bought, or if any sold. It gives real clarity on institutional conviction.
Got it. 13Fs, mid-November. Anything else?
Beyond the scheduled reports, we should expect ongoing updates throughout Q4 on the actual commissioning progress and project milestones at Elk Creek. Any news there, positive or negative, delays or accelerations, will definitely move the stock.
Right. So, confirmed dates, project updates. What about the rumor mill? There's been a lot of chatter around NioCorp. What are the big speculative things people are talking about?
The speculation. Yes, there are three main things adding to the buzz. First, there's persistent talk about a potential major joint venture, a JV, or maybe a significant offtake agreement.
With who?
Given the nature of the minerals, the speculation centers on major U.S. aerospace or defense contractors potentially stepping in. That would be a huge validation, obviously. Secure future demand.
Makes sense. What's number two?
Second is potential inclusion in new ETFs, specifically battery metals or critical minerals ETFs when they do their rebalancing. If NioCorp gets added, index funds have to buy the stock, creating automatic buying pressure.
Okay. And the third one?
The third is just the ongoing M&A chatter. The idea that a larger established mining company might see the value in this unique U.S. asset, especially as it gets closer to production, and make a strategic bid to acquire NioCorp, it's always a possibility.
Okay, those are some potentially massive upside catalysts. But you mentioned the overall rating we're landing on is very high, a 9 out of 10 bullish. That sounds almost certain. Doesn't that downplay the risks? I mean, mining projects do face delays, cost overruns. Where's the caution in that rating?
That's a fair challenge, and we absolutely have to talk about the risks. The rating reflects a view that the risks are significant but likely manageable, not that they don't exist. The biggest one is development risk.
Delays and costs at Elk Creek.
Exactly. Potential for delays, potential for cost overruns during construction and commissioning. That's the number one company-specific risk.
And if there are delays, that leads straight to funding issues, right? They just raised $50 million, but they're still burning cash until production starts. Could they need another capital raise if things get pushed back?
It's definitely a risk funding risk. If there's a significant delay, yes, another capital raise, likely dilutive to current shareholders, could absolutely be necessary to bridge that gap. That's inherent in investing in this type of development story.
So why the high conviction then?
The bull case argues that the strategic importance of these minerals and the unique nature of this U.S. asset provides a sort of backstop. The thinking is that policy support, or perhaps a strategic partner like we just discussed, might step in before things got truly dire. It's a strategic cushion most development projects don't have.
Okay. Any other major risks?
The third one is just basic commodity price volatility. Demand might be strong, but the actual prices for niobium, scandium, and titanium can still fluctuate based on global supply and demand economic cycles. A big downturn in aerospace, for example, would impact projected revenues.
Right. Okay, so summing it up, we've got this unique U.S. critical minerals asset, strong underlying demand, technicals showing momentum, positive sentiment from institutions and analysts, plus a bunch of near-term catalysts. The risks development, funding, commodity prices are real but seem manageable, partly due to the strategic nature of the project.
That's a good summary. And when you put all that together, synthesize all the data points from the sources, the conclusion is pretty strong. We're landing on an overall bullish rating of 9 out of 10 for NioCorp developments.
9 out of 10. That is definite conviction. Can you just recap the 4 main pillars supporting that?
Sure. Pillar 1, the fundamentals. Strong exposure to critical minerals via a unique, large-scale U.S. resource with clear long-term demand. Pillar 2, the technicals. Very favorable picture, higher highs, strong momentum, trading above key averages. Pillar 3, sentiment. It's bullish across the board, institutional buying, positive analyst ratings, retail interest. And Pillar 4, the catalysts. That powerful convergence of near-term events, earnings, project updates, 13Fs, potential policy tailwinds, all happening basically now or in the next quarter.
So for someone listening right now, what's the takeaway? How should they think about this stock?
Well, based on this analysis, it looks potentially attractive for a couple of different types of investors. For short-term traders, there's clear volatility and a catalyst-rich environment offering potential near-term gains.
And for longer-term investors?
For the long-term hold, it offers that core exposure to the secular growth trend in critical minerals, plus that diversification benefit from its low correlation to the broader market. So it potentially fits both profiles.
A very thorough look at NioCorp. Thanks for breaking that down. Before we sign off, here's a final thought for you, our listeners, to chew on based on our discussion. We talked about that low beta, negative 0.06, and how NioCorp seems insulated from market swings because it's tied to specific project milestones and strategic needs. How much insulation does that really provide against bigger geopolitical shifts compared to traditional miners who rely more on stable global trade? Is NioCorp truly a safe haven in a shifting world? Something to consider.
Yeah, that strategic insulation angle.
Yeah.
It's a really interesting long-term factor to weigh.
Indeed. Well, thank you all so much for tuning in to this analysis of NioCorp developments. Remember to subscribe, like this discussion, and please do leave a comment below if there's a company you'd like us to cover next time.
We appreciate you listening.
We'll see you on the next one.